Let's bring in Scott Bauer, the CEO of Prosper Trading Academy. He's joining me this morning to help us get ahead of the week that, well, is to come. Scott, no numbers today at the bottom of the hour, but a busy week nonetheless for investors in terms of economic data at the top of the show. We talked about how the focal point will probably be on housing, with investors looking to see how, if rates on the rise, has slowed some of the 2020 trends that we've been seeing.
It certainly will be, Ben, and like you said, the housing market was probably the big outlier for 2020, and I really think it's going to continue here. We may see an uptick actually as people maybe thinking that the bottom was in mortgage rates with the uptick that we're seeing in rates right now. So I think that we're going to see a real strong demand early on here, but I would expect the housing market to really just continue at least for the first quarter of the year.
You know, Scott, I mean, that makes a lot of sense. In many ways, this 1% level that everybody's hung up on right now in terms of the TNX is really just a psychological level. I've been talking about the March highs, but we need something more than that, right? In theory, I mean, the Fed, very clear in terms of some of the comments. We joked around about the transparency that they're providing. Fed Chair Jerome Powell delivering his message to us from literally his dining room, his kitchen table. I mean, his counter. Talk to us about, I mean, what do we need to see here that before we expect to see some of those trends slowing? It's not just that 1% psychological level. We need something more significant than that. Am I correct?
We do, and to me, it's really inflation, which we're not seeing yet at all. You know, we are seeing the yield curve steepening a little bit, but they have said, and as you just mentioned, Powell mentioned this at his kitchen table last week. The Fed is not going anywhere. They are supporting this market. They don't see rates going anywhere. So that psychological 1% level, whether we get to 105, 110, even 115, you may start to see a little bit of panic in the marketplace, but the rates are not going anywhere. So until inflation just really starts kicking in, Ben, I think this housing market, is still going to be the leader of what we've seen.
Scott, if we start to see some inflation, we've got rates which have been on the rise. As you mentioned, the yield curve should be a focal point. Again, would we start to see the dollar start to participate? I mean, for years now, you and I have talked about how the dollar and the rates have seen quite the disconnect. I guess I'm wondering, though, that's been in a non-inflationary environment. That trend, in theory, could shift if we started to see some inflation come into play. And in theory, when you talk commodities and some of the prices that we're seeing in grains, metals, and energy markets, we are starting to see some come into play, and maybe that's what is firming up the dollar.
It could be, Ben, and listen, overnight the dollar traded the high it's been in a month. It almost traded 91, even though it's down about 1/3% today. But you're right. This trend that we've seen over the last, let's call it 18 months or so, has been during a very deflationary time. So if that does start to kick up, we could see a big shift. But in the near future here, I think the dollar is pretty stuck, in a very tight range on the lower, certainly on the lower end of this range. We know what Janet Yellen is, her policies probably want to be. She's going to affirm maybe a more traditional commitment to the currency and to
all right, ladies and gentlemen, we just lost Scott. He was just talking about the dollar. Let's take a look here. That's a good look at the daily time frame, but I want to zoom out a little bit. I just had this chart as Scott was talking. I was pulling this one up to show you guys. Take a look here, ladies and gentlemen, at the weekly time frame, because Scott was talking about potential for this thing to firm up if we start to see some inflation related to Janet Yellen and her policies and her approach towards, well, as she, again, as I mentioned at the top of the show, is expected to be brought in as Treasury Secretary. But take a look. This is a key area where the dollar just lost some of its momentum to the downside. So, we always find it, point out how it's interesting that the fundamentals oftentimes can tie into the fundamentals, tie into the technicals. Let's get some more of those fundamentals. We got Scott back here. Scott, you were talking about Treasury Secretary Janet Yellen, or soon to be Treasury Secretary Janet Yellen, and some of her approaches towards and the impact that could have on the dollar.
Yeah, sorry about that, Ben. Yes, I mean, she's going to be a little bit more traditional in terms of policy. The Biden administration and Janet Yellen, they're not going to look to necessarily, keep the dollar down. That is just not in the cards there. So as you were saying, what we've seen over the last 18 months has been during a deflationary period. if we start to see things rev up a little bit, if we start to see inflation kick up a little bit, that is going to change the commodity market. That is going to, put a little heat in there, and we could see a little transformation in the dollar. But in the near term, though, I think we are stuck in this lower end of the range to where we've been.
All right, Scott, speaking of the dollar, this week, a lot of activity for currency traders. You got central bank activity. It's the Bank of Japan, ECB, Bank of Canada first and foremost. Is this going to be somewhat of a precursor in terms of what we should be looking for next week as far as the FOMC and their two-day meeting to come?
I kind of look at it as this week's announcements from many of the other central banks are on the heels of what the FOMC has just kind of reiterated. I think they're going to kind of follow what we've already said, or what our FOMC has already said, where, they're probably going to try and let things run hot. They're going to continue to support their economies, and they're going to, maybe even flood their markets with more activity. I mean, you look at the dollar versus the yen right now, and, it's right in that 104 range. The dollar is little changed against the yen. It's been in a very, very narrow range over the last few weeks, and that probably still continues. And I think much can be said the same for the Aussie dollar, for the New Zealand, the Canadian dollar, et cetera.
All right, sounds like the focus is going to be, or has and will continue to be, on the currencies, inflation, rates. We've got a lot here in terms of what traders should be keeping an eye on. Scott, I appreciate you joining us here to help us take a look at what's playing out here in the currency markets and in terms of financial markets in general, rates as well, because again, while that TNX move through the 1% level did attract some attention, maybe not necessarily enough to derail some of the trends we've been seeing. Scott Bauer, ladies and gentlemen, thanks to you. Ladies and gentlemen, Scott's the CEO of Prosper Trading Academy. He's joining us this morning to talk financial markets and